Good afternoon and welcome to Flexiroam's third quarter result investor webinar. My name is Howard Marks, an Executive Director at Atomic Markets, and I assist Flexiroam with their investor relations. With me today is Flexiroam's Chief Executive Officer, Marc Barnett, who will run through the results with you. Following this, Marc will be happy to take questions. If you'd like to ask a question at the end of that session, please use the Q&A function at the bottom of your screen, and I will ask Marc on your behalf. Over to you, Marc.
Thanks, Howard. Just want to make sure everyone can see the presentation that's happening. Cool, I think we're good to go now. Everyone seems to have come in. We've got enough attendees there. We've sort of got critical mass to get going. So hopefully if anyone else joins later, they won't have missed too much. Okay, let's dive into the results. So I think we had a really good quarter in Q3. So we'll just take everyone through a bit of a summary over the next couple of slides and then try and add some color throughout the rest of the presentation. So revenue at 2.5 million, up 21% on the previous quarter and up significantly year on year. And look, when just that in context alone, just when we were writing the deck, that first sentence just jumped out at me that last year we did 3.2 million for the whole year. So to be up to 2.5 million a quarter now, and we're significantly ahead of this year's full year target that we published was 7.2 million. That number's going to come in closer to somewhere in the 8.8 to 9 million range for the year. So from a revenue perspective, it's very green. All signs are really positive, and there's nothing that indicates anything other than it will continue to grow. Cash receipts of just short of 3 million, again, up 20% on the previous quarter and up very significantly year on year. And we sort of think about where we were from a cash receipts perspective. We used to rely heavily on a bulky payment from MasterCard in order to get anywhere near $1 million of cash receipts a month, and to now be up at almost $3 million of cash receipts, and that number continues to grow is quite a healthy sign. Gross profit of 1.25 million, up 166% on the previous quarter, and we'll get into some detail of where that's coming from and the changes we're making to the financials of the business. Operating cash burn of under 500,000 Oz. A chunk of that came from legacy payments, and so the current state of the business is again really healthy and pushing towards that cash flow break-even point. Those legacy payments are now completed. Those legacy payments, for anyone that's not across it, are related to the COVID period when COVID hit the business pretty hard. We didn't have the cash to pay for all of our data costs, and we negotiated some delayed payments. We've now been able to pay those off in full. So the payments related to data costs consumed in 2020 and 2021 that had been delayed and now paid in full. And even taking that into account, we've managed to get our operating cash burn down under 500,000 for the quarter. And again, everything suggests that number is going to continue to come down and be under 400, under 300, and so on and so forth until we're into a positive number in that respect. So down 19% on the previous quarter, and we finished the calendar year, which for us is Q3, with a fairly strong cash balance of almost 2.5 million. And so with that operating cash burn continuing to come down and $2.5 million in the bank, we have a very strong runway in order to get us to where we want to get to. From an operating perspective, the biggest highlight is that we reduced our cost per GB, so our data costs, by 15% from September to December and 36% year on year. And in terms of financials, our data costs is our biggest cost. That is the core cost of the business. And so being able to reduce our data costs that significantly year on year and that much over the last 3 months is a very, very pleasing sign for the business. And we're expecting another circa 10% reduction between December and March. And so the more those data costs come down, the more we can be competitive with our pricing, and the more we can see those profits flow through to the bottom line. So again, really, really healthy. It's been a key focus for the business. Some of that comes from negotiating. Some of that comes from stronger buying power as our business grows and we're consuming more data. We're able to get those costs down, and some of that comes from some improvements we've made in the tech side of the business that have allowed that to flow through. We had our biggest single largest day in sales and our largest month. And so in November, I think we had our 2 largest ever single days, and November and December back to back were our 2 biggest months that we've had. So again, to be able to sort of not just have one big month or a big spike and then come back down, to be able to back that up 2 months in a row, and you know, the end of the year from a travel perspective is always really strong for us and a really important time for us to capitalize on that. And so data sales were very high. You'll see that in the deferred revenue, that there was a lot of sales, and that revenue is being captured, and we expect that to be used over the coming months and quarters. Significant improvement in the operating metrics. So new paying users up to 20,000, data sold just over 200 terabytes for the quarter, and monthly active users up to 31,000. Improvements in our marketing funnel. So one of the key aspects of the marketing funnel is our registration to payment. And so registration to payment conversions increased to 44%. That number was down in the 20s if you go back sort of 8 to 9 months ago. So a lot of the work that we've done is paying dividends, and we're seeing that growth continue. And then connectivity with 100 users from 146 countries traveling to 152 destinations, just showing the global nature of the business. Move forward. From a partnership perspective, we have secured a partnership with Emirates, and we've included Flexiroam data plans in the duty-free magazine in-flight aircraft, in-flight aircraft. So really big opportunity for us to secure that. It was a series of conversations that we've worked through, and to be able to land that and see the product now in the in-flight magazine in over 100 aircraft, that's expanding out to 180 aircraft. We'll go into that in a little bit more detail in a couple more slides, but really big highlight for us during the quarter. We onboarded 5 new banks with MasterCard. The total number of cards in force that now have the Flexiroam benefit attached to them is up to 1.1 million. And so again, a really, really key addressable audience for us. Those redemptions are now continuing to increase, and we're seeing the redemptions of the Flexiroam data turning into top-ups and additional purchases from those customers. So that's you know, a big part of that for us. It's there's a revenue component to the deal, where the larger the addressable audience, the larger our revenue is. Then there's a conversion, redemption, and convert into ongoing Flexiroam customer component, which is also going very well. We signed some reseller agreements, so with Optionizer and with Bike2Go and Easy eSIM. We signed a deal with a payment gateway provider in Saudi Arabia called AVA, and we did a deal with the Women's Tennis Association, similar to the deal that we did last year with the ATP. So the WTA have rolled it out to all of their eligible athletes from the start of this year. So we've seen that spike, obviously, with the new season underway and all the players heading to Australia. And so that's going quite well. And then an agreement with Air Ocean Maroc, which are a private charter flight business based in Morocco. And so for all connectivity for their crew members when they're traveling predominantly around Africa. From a product perspective, we've introduced a new global data plan. So we've had some changes to our global data plans, and that's in line with the goal of reducing our data costs. So we'd offered different global data plans. There was a 90-country data plan. We've now introduced a new 150-country data plan, and the mix of those 150 countries has improved significantly. And so we've been able to offer a larger global data plan at a lower cost to the consumer and at greater margins to us. And so that launched in January. We've launched a new multi-SIM flow, which again is linked into the product side of what we're doing to reduce our data costs, so that we are able to provide different connectivity from different suppliers under the one SIM. And so it allows us to cherry pick the best pricing that we can get from different suppliers and ensure that A, we're getting the broadest connectivity possible to the consumer, but B, we're doing that at the lowest possible costs to us and ensuring that the margin is captured throughout. And then we've developed some technical tools to enhance our customer support. That's all linked in with that multi-SIM flow. Launched a new corporate website, which we'll talk about in a second. and then started to do some more penetration tests across the service to enhance our security and our reliability. We're very conscious of the fact that we're planning to scale the business fairly significantly, and we want to ensure that when we do so, we're doing that on a stronger foundation as possible. And some of those security elements and reliability elements are part of our agreements with the likes of MasterCard, where we need to maintain certain levels and certain standards and be able to deliver on those in order to meet the agreement. So all of that is what's been going on over the last quarter. So if we move through to our customer experience, a lot of focus on refining the customer experience. And with that, there's sort of 4 key components that we've been focusing on. So we're in the process of developing a comprehensive chat bot. And that's really to probably do 2 things. One, take the pressure off the team in terms of the number of queries that come through, but just make it easy for the customer to be able to say, look, I'm trying to install this, how do I do it? And the chatbot will come back with the answer. It won't be able to do everything, it won't be perfect, but it will take a lot of the pressure off the hands-on team. We're also increasing the size of the team, and we continue to do that as our users scale, improve capacity, 24/7 support. And there's sort of a mention there about our customer service team will act as experts in a retail-like customer experience. And so what we're noticing is our customer support isn't just about, you know, this isn't working, I can't get it to work, please help. There's obviously some of that. Some of that is questions about what plan should I buy, and I currently have this plan and my friend is traveling, should they do the same thing, or how do I share my data, or whatever the case may be. And so the more that we can handhold customers through that process and guide them through what the best plan to buy is. And there's a lot of trying to dispel the myths around eSIM. It seems a bit scary. I've never used it before. How does it work? What's that going to do to my phone? All those kind of things. So we've beefed up the size of the team and are training the team on more than just, this is broken, this doesn't work, my phone's not getting connectivity, and being able to help them walk customers through, because we don't have a physical retail store or anything that a normal telco would have. And so the more that our customer service people are acting like those retail partners of the customer, the better. We're also in the process of starting to redesign the app. So we've launched a new corporate website. We also will be launching a new app with improved features and prompts throughout the app, and redevelop it so that there's comprehensive language translation and everything that we think we need to be a true global business. And so that will take some time. It's not going to happen in the next month or 2, but the designing phase has certainly begun. And as we finish all the work that we're doing on the infrastructure and the back end, the next thing will be to add the new app on top of that. And then enhancement to user guides and FAQs. So we've rolled out a lot of videos and user guides over the last few weeks. We've increased the language options for those user guides and the FAQs. And our view is the more of that we can do, and the more we can educate the customer on how to use the product, and the easier we can make it, the better it is for them, and certainly the better it is for us. So I mentioned the new corporate website. The corporate website is really there to try and increase lead generation and showcase our B2B offering to a wider audience. So we'll talk a little bit later about the different segments that we're creating, but things like terminal enablement services, which are the MPOS devices and the parking meters and those kind of things, maritime services, aviation services. These are some of the areas that we've already, let's say, moved into and got somewhat of a foothold in. And this new corporate website is there to showcase the capabilities of the business, give some examples in terms of analytics and platform access and what we can do. And as I said, the aim is to be able to cast the net a bit wider and get some inbound lead generation. Obviously, we have a sales team who continue to do all of our outbound stuff and are trying to always grow those different segments, find new segments that we can put into, let's call it the incubation phase, where we're trying to grow a new area. And as we get 1, 2, 3, 4 customers in that area and it grows, we'd spin it out into an area of its own and start to report on the progress of that. But the launch of the new website has now happened, and we're obviously starting to push that from a marketing perspective and get that out there. And we think it's a really good tool, even when we're generating outbound traffic and outbound leads, to be able to direct people back to that and say, this is the kind of reporting that you can get, this is the kind of platform access you can get, this is how it works. And then from that, we can convert them into a demo and a trial, and from a trial, obviously convert them into a signed partner. So key deals across the last 3 months, Emirates we've touched on. And so everybody knows who Emirates is, leading airline, really big deal for us. It is effectively a physical SIM and an eSIM in one, so in the same pack, and a customer purchases that on board. They then can choose, depending on their device or depending on how they want to use it, if they'd want to use the eSIM or the physical SIM. So they'd download the Flexiroam app. They would then select which one they want to activate, the physical SIM or the eSIM. If it's the eSIM, they'd select that, install the eSIM and be off and running, or they'd select the physical SIM and pop that in their second slot, or switch SIMs over if that's how they would prefer to do it, depending on their device and depending on what they're able to do. And they'd be off and running from there. So it's been available on planes from the 10th of December. The initial order was filled in full, and they've placed a second top-up order, which was delivered on the 15th of January. And so there's still a lot of rollout to happen. I'd say it's still very early days. Very happy, both sides, in terms of how the first month has gone. Bike2Go. So we signed a white label reseller agreement with Bike2Go. It is a $150,000 minimum guarantee in the where we're invoicing them every quarter, irrespective of the volume that they're able to get through. They are tracking quite well at the moment and getting through that volume. So far, so good on both sides. They were already getting through that volume in terms of using local SIMs and wanted to move into roaming SIMs. And so the good news for us is that the volume was already there. The customer base was already there. They were used to selling SIMs, so it wasn't a cold start. And so that run rate has kicked in immediately. Optimizer, I've signed a white label agreement. They're a software provider with alternate payment methods across multiple regions and currencies. And so having the ability to add a roaming eSIM capability into their mix was something that they wanted to be able to do. We've launched that, and that's gone live. Easy eSIM, another white label agreement with them. They're an international SIM card company. They've added us into their mix. WTA I've touched on, AirAsia Morocco we've touched on, and AVA we've touched on. So happy to answer any questions on any of those specific deals if anybody wanted to ask. So on Emirates, just to go a little bit deeper, because I know there's a fair amount of interest in that. So I took 2 Emirates flights in December, and so got to sort of go through the experience myself. In the magazine, so you flick through the magazine, you find the magazine. If you want to order it, you push the button or wait till they walk around with a trolley and offer the duty free. On both flights that I was on, they had one Flexiroam SIM on board in stock. So just to give you an idea of the phase of the rollout, it's certainly not at its fullest as yet. As I said, they ordered more stock. That got delivered on the 15th of Jan. They're expanding from 100 planes out to 180 planes. They're going to increase the stock volumes. In terms of the sales so far, I can't talk about the specific numbers because we're not allowed to disclose that info on their behalf, but they're certainly happy with how the first month has gone. We're very happy. The split between physical and eSIM, you can see there, 56% eSIM, 44% physical SIM. So in that sense, good that we're offering both, because if customers want both, it's best for us to be able to give them what they need. I think one of the key stats there is 19% of customers purchased additional data once their plan has expired. So we can see, we get a report every month from Emirates as to how many have been sold. We can see how many have been activated. Of those that have been activated, how many have expired, what percentage of the data got used. And then we can track of those that have used in full or expired, how many have then since topped up. And so at the moment, that's tracking to 19%. And so it's a great outcome for us. Like we then own the customer going forward. They're a Flexiroam customer. They have our app. They purchase directly from us. In terms of the way the deal is structured, there isn't any ongoing commission or anything paid to Emirates from those customers. That's literally us acquiring the customer without having to pay to be in the magazine or anything like that. So Emirates are purchasing sims from us. They're putting us in the magazine. They sell them. They clearly make a margin in terms of what they sell it for versus what they bought it from us. So they're happy. But then we acquire the customer, and all of the future top-ups that come from the customer are ours. And so so far so good. As I said, it literally launched on the 10th of December. So the month of December was a shortened month in terms of timing. The stock rollout was, I would say, relatively slow, and we're sort of ahead of target in terms of their initial expectations for what they were looking for. So the first monthly review was a positive one. They're happy, we're happy, they've ordered more, and the rollout will continue. Key metrics, as I said, the biggest thing to call out is the data cost coming down by 15%. The month of September was a big month for us. So this is comparing September on December. And so September was a huge spike. December, slightly higher than September. But as I said, the key for us was November and December. So November was the record month. November had 2 single days that were our 2 largest single days, November 11 and November 12. We had a lot of marketing activity and a big sale around that period, and generated a lot of volume in the month of November. Backed that up in December with another really strong month. And so volume of data sold up in that 75 terabytes a month, volume of data consumed in the sort of 50 terabytes a month. So we're building up future revenue and deferred revenue. When we think about, we're selling 25 terabytes more data than's being consumed. So that revenue will flow through. When that flows through, it's flowing through at the lower data costs. And so again, from a key metrics perspective, we're really happy with the progress. Financials, so a lot of green dots on the page is usually a good sign. So year-on-year revenue up 126, quarter-on-quarter up, cash receipts up 20% quarter-on-quarter, and then EBITDA down 50% year-on-year and down 70% quarter-on-quarter. So again, strong set of financials. We're looking at similar/improved numbers for Q4. It'll be a really strong finish to the financial year. We will have exceeded all of our revenue, cash receipts, and EBITDA targets for the full year for FY23. So again, happy to take any specific questions on the financials, but really happy with how they've come out. From a cash perspective, as I said, just under $2.5 million cash balance at the end of the quarter. Operating cash burn of 488, which is almost 20% lower than last quarter. Legacy payments are now done. And so with those legacy payments out of the way, we should see much more of that flow straight through to the bottom line over this next period. And from a cash receipts perspective, as I said, up over 200% year on year and up 20% quarter on quarter. So again, financials all sort of tracking exactly how we'd want them to be. Deferred revenue we've spoken about, and that's $2.5 million worth of deferred revenue there. And so just for anybody that may be new to the business, deferred revenue for us is basically we have sold it, we have collected the cash, and the data hasn't been consumed or hasn't expired yet. So it converts into revenue for us when the customer either uses the data or the plan expires, and at such time, then it falls through to revenue. So it's basically just tracking where we've collected the cash, but the revenue hasn't yet been consumed. And so that basically says we've got $2.5 million worth of data sitting there waiting to be consumed in customers' accounts. And when it is consumed, it converts to revenue. And obviously we incur the cost at the same time, but we're incurring the cost at the lower data costs. And so the more that we can chunk that down, things that we may have sold 6 months ago, 8 months ago, 10 months ago that are being used now are being used at, anything between 15, 20, 30% lower data costs than what we had assumed when we sold it. And so we'd obviously priced our costs in at the time. The margin then grows if by the time they consume it, our data costs have come down so much. And so there's only good news on this slide from my perspective. Cash receipts on the monthly basis, you can see growing fairly significantly back in March 2022, where we see that spike to 0.8. That was a $500,000 MasterCard payment that got made that spiked up, or $388,000 something MasterCard payment that spiked up. And what we're seeing now is that's just our normal run rate. So over the last 6 months, we've been at somewhere between $800 and $1.1 million a month cash receipts. So really strong positive growth there. So in terms of how we're talking about the business, we used to talk about the business as travel and solutions. And solutions was a bit of a sort of undefined bucket. It was a bit of a black box. And so what we want to do now is break that out in a little bit more detail, and rather than just having a sort of catch-all number that says solutions, which really the definition of solutions was non-travel. And rather than it being non-travel, we're breaking it out for a few reasons. One, we think it's better from a reporting perspective for you as shareholders to understand how the business is growing and where we're focusing. Two, it's much clearer for our salespeople when we start to give them targets. It's clearer for our product teams in terms of how we want the business to evolve and where we need the tech to grow towards. And so initially, the 3 key verticals that we've broken out are aviation services, terminal enablement solutions, and maritime services. And so aviation services is aircraft-related connectivity. We obviously have a long-standing partnership with Korean Air. There are a number of other opportunities that we're working on to either provide connectivity to crews, ground crew, logistics suppliers, charter flight companies, the cockpit connectivity that we provide to Korean Air is included in that. So anything that sits in and around aviation services, not the Emirates stuff, because that's in the end that's a consumer travel product, but anything that is providing connectivity to the crew, the staff, the aircraft itself would sit under that aviation services banner. Terminal enablement solutions, primarily MPOS devices, ticketing and parking terminals, and endpoint use cases. And then maritime services, we've started to get a foothold in the maritime space. There's a number of different companies that we're now talking to. And so connectivity from ships, tankers, offshore vessels, cruise liners, private yachts, any of those that want to be able to connect either when the ship is docked or when it's close enough to shore to pick up our connectivity. There's a lot of opportunity in that space, and so there's a big focus there. And then incubator is sort of what we're calling other. So where we don't have enough customers, or it's not large enough yet to spin out a segment of its own from a reporting perspective, we're leaving it in that sort of incubation phase. But that includes things like wearable devices, enterprise solutions, telematics, anything along those lines. And so we're still of the view that we want to cast the net as wide as possible and capture as many different use cases and different segments as possible. And we found that when we do that and we can capture a new use case and prove that out, we often then find the second, third, fourth, fifth customers to come off the back of that. Once we've done that, we spin it out into a new segment, and we can start reporting on that. So this is just a bit of an explanation of how you will see our FY24 numbers presented and shown. It's how we're budgeting for the new year. It's how we're recruiting, incentivizing, and building our sales team. And so I just want to share some of that detail with you so you can see what's coming. So before we jump into the questions, which I think we have about 8 so far, feel free to add some more if there's anything pressing. Just some key takeaways. Data cost per GB down 15% over the last 3 months. And we're forecasting that to come down a further 10% in Q4. Continued rollout of SIMs in Emirates aircrafts and MasterCard expansion beyond APAC to accelerate. So 2 of our key partners are really pushing and accelerating the rollout. We're supporting them in that and are fairly closely tied to them. And so both really important for us. Ongoing evolution of our retail customer experience, as we mentioned, focused on growing the team, having that hand-in-hand retail experience, walking customers through how to use the product, how to get the best out of it, which plans to buy, and all of that culminates in a new and improved Flexiroam app over the next few months and quarters. Deeper focus on the specific segments that we just talked about, and then really pushing to achieve cash flow break even in the next financial year. And everything that we can see from our financials tells us that that's more than possible. So really exciting. Really happy with the progress. The sort of turnaround from where we were this time last year to where we are now, we're really proud of, and we think we're on the right track. We think we're doing the things that we need to do every day in order to deliver on these numbers, and hopefully you can see that. And happy to jump into any questions that we now have.
Thanks, Mark. Just a quick reminder to everyone who wants to ask a question to use the Q&A function at the bottom of the screen. I can see some of you already are there, which is great. And then I'll ask those questions to Mark on your behalf. We have a number in already, so I just might get tracking, Mark. You talked a little bit about the app in the presentation in your customer experience slide, etc. Can you give us a little bit more, I guess, information about what that might look like? You know, after the website rollout that you described, how's the app upgrade going to look? The experience you'll receive?
Yeah. So look, really early stage for us in terms of what that's going to look like and the planning of it. So we've done a lot of work on the back end infrastructure. We've done a lot of the boring work that doesn't sound that sexy and doesn't really, you know, come through as a consumer. You're not really going to see anything at this point, but we've spent a lot of time over the last 6 months really improving the back end, improving the stability and the scalability and the security of all of our services. And once we've sort of built that foundation and laid the slab, we can then start to put the new house on top of it. And so really early stages in terms of the designing. Our app is old, so there's nothing wrong with it. It works, it does the job, but there's a lot that we can do to refine it, make it a much slicker, smoother process. There's probably a bunch of steps that we can cut out. We can make things a lot more intuitive. There's a little bit of, it makes sense once you know how to use it, but if you don't know how to use it, then you probably got to ask a lot of questions. And so we've been really careful to make sure that we're capturing a lot of the themes that come through our customer service team and capture what those key questions are so that we can feed that into the process of building the new app and ensure that we're doing everything possible to make it self-service. In a perfect world, a user should be able to purchase from us and move all the way through to installing their eSIM and getting live without ever having to talk to us. And so we're sort of really clear on what we want the outcome to be, but we're still in that really early phase of starting to design that and see what it looks like. And so that's the exciting work, right? The boring work that sits behind the scenes is all the stuff that we have been doing. We're starting to get into that phase, and I think the team are pretty excited about being able to move into, you know, starting to mock things up and what's it going to look like and what kind of features could we add and what would that mean and what does that mean for users and should we do A or B and how are we going to test that and all those kind of things. So.
No, that makes sense. Following on from that, you also mentioned in your presentation, I think under the partnerships segment, if you like, about MPOS. So could you give us an update on the current IoT direction and that MPOS rollout?
Yeah, so look, the MPOS rollout is not as fast as what it has been. We've had one of our key partners lose 2 of their key clients. So the sort of number of SIMs continues to grow. Distributed SIMs continues to grow. So there's multiple phases. So a customer would purchase SIMs from us and we class that as distributed SIMs. They bought the SIMs, they paid for the SIMs. We've now sent the SIMs out, they have them. And then there's build SIMs, which is they then put the SIMs into the terminals. And once the SIM is in the terminal, then we can start billing for it every month. Distributed SIMs is up. We've had people buying bulk SIMs. We've had people buying the white labeled version of the SIMs with their logos on them and not ours. And so the number of SIMs that we've now got into our customers' hands is considerably higher than it was probably 6 months ago. the number of build sims is slightly up, but closer to flat. And that's basically because we've had fairly good growth from most of our clients, and then one's gone backwards a fair chunk by losing two of their big partners. And so not the best outcome, but the good news is it's not a reflection of us. It's not that things went poorly or went backwards in that sense. The orders are still coming through, and they're still growing from all bar one client, and that one client's gone backwards. What we need to do in that area is we need to be able to expand outside of Asia. So we have a fairly strong foothold in Southeast Asia in the MPOS market. We've spent a lot of time growing those relationships and growing those customers, and that's going quite well. The key for us is to be able to land some big MPOS clients outside of Asia, and the sales team are working on that. There's a lot of conversations that are ongoing, but we haven't been able to land it.
That makes sense. Follow-on question from, and again, another one of your areas of focus within the presentation, which was Emirates, and I guess you mentioned that you're happy with the first month or so of activity. It's early days, but it seems positive. So can you give us a little bit more color in terms of an update on the activations and sales, or is it just something that you just really can't give a lot of detail on?
I can't give specific numbers in terms of how many have been sold or anything. We've sort of checked with them around what we can and can't say, and we can't give any specific numbers. But as I said, like, I was on 2 flights, and they had 1 sim on board on each. And so nice to take some photos and all those kind of things of the magazine and see the process and go through it and give them some feedback on what that looks like. But such early days in that sense. Like, the aim is to have that rolled out into all planes and ensure that. And look, to be fair to them, they're testing. It's a brand new product for them, and they have their processes in terms of how they roll these things out, and they're evaluating all sorts of products at the same time. I can only go by, we had a monthly check-in call with them at the end of the first month, and they sent all the results through, and they're really happy with the process and how we work with them so far. We deliver everything on time. We answer all the questions quickly. There's been no, refund requests or pushback from any of the customers. They haven't had any, but they're all the fears, right? The fears they have is that customers are going to buy these things, and on the plane, they're going to be saying to the stewardess, I don't know how to do this. Can you help me set it up? This is too difficult, so on and so forth. And there's been none of that. Look, so far so good, early days. To get that sort of 20% top-up rate, I didn't know what to expect. We hadn't done this with anyone like Emirates before, so it's hard to sort of forecast something from scratch. But I'm certainly really happy with the 20% top-up rate or repurchase rate, especially in our kind of business, right? Like, if you're only traveling for a week, you may have had a fantastic experience, but you don't have another reason to top up. If you go back home, you've used the sim. So the fact that 20% of the passengers who've used it in full needed to buy more, wanted to buy more, decided to top up and buy again, I think is a really good sign. And we'll track that over time. And there may be customers who traveled now and aren't traveling again for another 6 months. We'll see that top up happen in 6 months from now when they go on their next trip. So it's a longer term thing for us to be able to really understand the full benefits of the partnership. But look, you get on the plane and you open the magazine and you see Flexiroam in the magazine, it certainly feels good. And it feels like a validation of the product that we're in there, and we're not paying to be in there. There's no marketing costs or advertising costs associated with it. And so it's certainly a good place for the brand to exist.
Yeah, good. Question from another shareholder, which is a little bit off track, if you like, from where we've just come from. So wanting to know how the nearshore and sim local partnerships are progressing. Can you give a little bit of color and insight?
Yeah, I can. So let's go sim local first. So sim local, what they're basically doing is they're building a new app of their own. So they're building a brand new eSIM app, and they're then integrating all of the partners that they have signed with into that app. They're on track to release. They're trying to get it done by December. They're behind. They now think that they should be able to go live by the end of February. So the integration with us is scheduled for mid-February. We've done everything we needed to do. We've provided them with all the APIs. And so there's no dependency on us. It's now literally just on them to get the integration done. They're telling us it'll be done by mid-February. Once that's done, we will then be in their new app as one of the global eSIM providers that will be there for the new app launch. So once they've integrated everybody, they'll then launch the app. We're expecting that to be in March, and then revenue will obviously flow through to us in March. So from a process perspective, any SIM local customers will be able to purchase Flexiroam and any other eSIM offerings that they integrate from their app. That'll API call straight to us. The order gets served, and we obviously bill SIM. They collect the cash, and we bill SIM local from there. So it's everything we expected it to be. It's probably about 3 months behind schedule, and that's not a huge surprise, but that's sort of on them and not anything that we can control. No. And then on nearshore, nearshore's come to us with some really interesting opportunities over the last probably 6 weeks, 4 to 6 weeks, which we're working on. These projects I'd probably describe as installing hardware on vessels, and in particular, these opportunities were on cruise ships. So they basically are part of a tender process with some cruise liners where they install the hardware, 2 antennas per ship, and they then put the connectivity, which in this case would be ours, into the antennas. And obviously, if they win the tender process, then it's their hardware with our connectivity, and it starts to get rolled out to antennas per ship across X number of ships. And so it's a longish process, that kind of tender process. Our tech guys, the nearshore tech guys, have been involved in a whole bunch of testing, speed tests in the US and in Europe. And so all that's sort of been ongoing over the last 6 weeks. So I don't know if we're going to win it or not. It's not just ours to win. There's a lot of things that go into it: the cost of the hardware versus other options, the cost of our connectivity, our upload and download speeds versus others. So the good news is, from a partnership perspective, we're working really closely with nearshore. They're a great partner to work with, and maritime services is a key segment for us. So on track overall from a relationship perspective, but it's one of those things where it can sort of be very little revenue and a hell of a lot of work for a period of time, and then all of a sudden it becomes not much work and a lot of revenue, because once you sort of get those antennas installed on a cruise ship, they don't come down that easily. So once you're in, and then it starts to roll out across all those different ships. So look, the best I can say, I guess, is fingers crossed that those tests have gone well, and that nearshore end up winning those opportunities. And if they win, we win.
Yeah, fantastic. Another shareholder has asked about the Gordian and Discovery Insurer integrations, whether they're still on track, and you know, are they're ready? Will they be ready by this quarter, or in this quarter, or where are we up to on that?
Yeah. Unfortunately, it's a similar story, and it's a little bit of a story of our business. Everything seems to be delayed, unfortunately. But Gordian continuing, I think I said this in the last quarter, and we continue to get the same answer from them, unfortunately, which is they're down on resources, and they're continuing to focus on their third-party ancillaries, and the main priority for them is to onboard the largest revenue opportunities. And so for airline ancillaries, that's things like seat selection and baggage. And so that's coming first. The Flexiroam eSIM option is part of their ancillary products, but it sort of sits behind those just in terms of a revenue opportunity. So look, we continue to check in with them and see where they're at. They don't need anything else from us. They're literally just working through adding all the partners. Good news for them, I guess, is that they've got a lot of integrations to do. Bad news for us is I wish we were integrated last quarter. It probably doesn't even look like it's going to get done this quarter. It now probably looks like it's more in the April to June quarter. So look, the deal's signed.
Yep.
All of the integration stuff that we need to supply has been supplied, and now we're waiting for them to do what they need to do. Discovery, probably a bit better news. They still think that they're on track to launch by March. The delay on their side is at least a good delay, because they're adding our benefit to more of their products. It was originally just one part of their offering. It's now a broader part of their offering, and so they have a minimum guarantee in the contract with us, and they're really confident that they'll still hit the revenue forecast and the commitment in full, because even though they're starting later than they thought, they're rolling it out to more products than they thought. So more products in a shorter period of time will still get to the same outcome. So everything they've told us is that it'll be live by March. So fingers crossed that the next time I'm sitting here talking about this, I can tell you that it's finally gone live and that we're off and running.
Yeah, brilliant. Question from shareholder on the MasterCard deal, and really sort of an adjunct to that, which is, have there been any new banks integrated outside of Asia since the signing of that deal?
Yeah, so outside of APAC, no. We just had a fairly large one go live in Australia, but it's still classed in the APAC region. So Latitude Financial went live on the 1st of Jan in Australia, and redemptions are ramping up pretty hard from there. So nothing outside of Asia has gone, outside of the APAC region has gone live as yet. We have a project in Macedonia that's signed, which is sort of the pilot project in Europe. So that's signed off and done, and going through all of its sort of user acceptance testing and the different phases we need to go through in order to go live. There's a fairly large deal in Germany that we're in the final stages with in order to roll that out as a second European project. And then there's a broader EMEA deal in this region here across the Middle East that we're targeting to go live by March, April. And that's fairly large in terms of the volumes. It's sort of as large as everything we've done in APAC combined to date, if not larger. So that's probably where our biggest focus is in terms of being able to get a big chunky deal live and start to really kick off this global deal. And then we're just working closer and closer with the global team. And so we have some key contacts that sit in the global team. And then, we work in with the guys in Europe, the guys in the Middle East, North America, South America, and there's different phases of the discussions. Europe and the Middle East are the most advanced, and that really comes from those two regions were wanting to do a deal with us as a region, and then that all got put on hold while we did the global deal. So they're the two that are sort of the most advanced and where we've got the most traction.
Yeah, good. So another one more now on the financials. So eSIM quarter-on-quarter growth was low and seems to lag the changes in new paying users and other metrics. Can you provide more detail, I guess, drivers of the eSIM growth?
Yeah, so look, new paying users are users who have purchased a data plan, but they may not have necessarily activated their SIM yet. So it could be viewed as a leading indicator of eSIM activations. So there's a little bit of sort of, not necessarily, those two numbers don't necessarily correlate in the same quarter. What we're seeing is, look, I'd say overall, the eSIM quarter-on-quarter growth was clearly lower than what it has been. But if you look at the full numbers, it's still sort of 18,000-ish, I think, last quarter to almost 20,000 this quarter. So look, it certainly hasn't come up for us as a concern. It probably doesn't look as nice on a slide, but no major issue or concern from our perspective. We launched the new multi-SIM flow in January. Marketing spend in January has been fairly conservative, and we focused on iOS users in particular, and focused on sort of what that overall customer experience looks like. But yeah, look, overall, I'd say that it hasn't come up as a major concern. I guess the growth rates probably aren't going to continue to sort of outstrip in those big chunks as we're starting to come off larger bases. But as I said, and if you look at the data sold and data consumed as well, right? Like we're selling 75 terabytes of data and people are using 50. So some of those new paying users may have come into the ecosystem, purchased, and are going to use at a future stage. And so we may see those activations come further down the track.
All right, very good. Question on potential capital raise. With our cash and the cash burn, will we have enough to avoid another capital raise? Very blunt question.
Yeah, blunt question, but good question. Well, I think the blunt answer is yes. So based on our forecast and everything that we can see, we don't think that we require another capital raise. That doesn't mean we won't do one. We may choose to do one if there's a reason to do one. But on sort of current course and speed of the business, we have $2.5 million in the bank. We had a burn of sub 500,000, and that burn is going to continue to come down. And so if that burn keeps coming down and 500 becomes 400, 300, 200, then $2.5 million in the bank is more than enough to continue to run the business through to cash flow positive. So I think the best way to answer the question is I don't see any need to raise capital, whether that means we do for different reasons or whatever. I don't have a crystal ball, right? Like I don't know what's going to happen in 6 months, 8 months, 12 months, if there's opportunities that pop up where we say, look, we're going to raise money because we're going to do this. But I don't think we're raising money because we ran out of money. I don't like that. That to me is not the concern.
No, that's fine. Thank you. Another cash flow question. Does cash flow break even for FY24 mean for the full year or achieved at some stage during the year?
Great question. I hope it means both. When I'm saying it, what it means is at some stage during the year. It means that we will get to the point where we are, our bank balance is increasing, not decreasing. It doesn't necessarily mean that we will finish the full year positive. I hope it does. That means we will have overachieved on the plan. And so let's aim for that. But in terms of the answer to the question, in terms of when I say it, what do I mean? I mean at some point during the year.
Yeah, no, good. Makes sense. Is there any follow-up with customers who don't convert from app download to purchase?
Yes. So where we can, it depends on what we've captured. We re-message those users either in the app from a notification perspective, or if we've managed to capture their details, their email address and the like during the sign up phase. There is retargeting that we do. So retargeting engagement ads where we can identify those users, push notifications. There's offers around X% discount for your first purchase, all those kind of things. So yes, that's definitely a key part of the marketing strategy.
No, good. So this is the last question online. So if anyone has any other questions, quickly put them into the Q&A and I'll get them out. But in the last one that we have at the moment, are you hoping other airlines follow the lead of Emirates? Do you have any other airlines in the pipeline?
Yes, we would certainly hope that other airlines follow the lead. That'd be great if that was possible. Do we have any in the pipeline? We got a lot in the pipeline that we're talking to for a whole bunch of different use cases. So not all necessarily the same as Emirates, but there's certainly a lot of airlines that are in the pipeline, and we're talking to about all different things that range from probably even deeper than Emirates, where I think in an ideal world, one of the things that we've talked to a lot of airlines about and been pitching is we'd love to be integrated into the booking process. I think for me, that's the gold standard, where you go and book a flight and you have the option to add on a hotel or a hire car or data roaming. I think that would be the ideal. And so there's a number of airlines that we've sort of pitched that to, all the way through to crew connectivity and the like. And so different models for different airlines. There's one that we're fairly close with that's a very large consumer airline, similar to an Emirates, but we're initially starting with their logistics arm. So they have a fairly large logistics business that requires individuals to travel with the logistics, and they all need connectivity, both phone and iPad and device, and the scanning of the products. And so they're gonna kick it off in that way. Our view is any foot that we can get in the door with any of these airlines, irrespective of what it looks like, is a win. And then once you're in the ecosystem and you set up as a supplier, the opportunities become much greater from there. So look, lots of conversations with lots of different airlines with a whole bunch of different models. So yeah.
No, that's fine. That's great. Thank you. Look, it looks like we're done for questions for the moment. So I'd like to bring the webcast to a close, the webinar to a close. If you have any other further questions, feel free to either reach out to myself at Atomic Markets or Marc Barnett. I'm sure we'll be happy to receive your email and your questions. Thank you for that, Marc.
Cool. Thanks, everybody. Really appreciate it.
Have a great day.
Thank you. Bye.
See you. Bye.